Hey everyone, welcome back to Corporate Decoder, the place where we figure out what these massive corporate filings actually mean before anyone else does. You know how sometimes a company says everything is booming, but the numbers tell another story? Well, we're going to see if Methode Electronics is singing a happy tune or if there's a different melody playing out today. This filing is a proxy statement, which basically means Methode Electronics is getting ready for its annual meeting with the people who own the company, the shareholders. They're asking them to vote on some important stuff like who should be on the board, what companies should check their books, and how the top bosses are getting paid. So the big meeting is happening on September 17th, 2025, and it's going to be online, a virtual meeting. You can tune in and ask questions if you own shares. If you can't make it, you can vote ahead of time by internet, phone, or by mail. They need shareholders to vote on three main things. First, they want to elect 7 directors who will guide the company for the next year. Second, they're asking if it's okay to keep Ernst & Young as their accounting firm for another year. And third, they want a quick thumbs up or thumbs down on how much they pay the top executives. This is often called a say on pay vote. The board is recommending a yes vote on all three of these things. They want you to vote for the directors, for keeping Ernst & Young, and for the executive pay plan. Now, a little detail about voting: if your shares are held by a broker, say at your bank or a brokerage firm, and you don't give them voting instructions, they might not be able to vote your shares on certain issues. For things like picking the auditors, the broker can usually vote for you even without your instructions, but for director elections or pay votes, they typically can't vote without your direct input. This is important because it can vote without your direct input. This is important because it can affect the outcome. The company is Methode Electronics. They make custom engineered solutions. They sell to the automotive industry, cloud computing, construction equipment, and consumer appliances. Basically a lot of different areas. We should keep an eye on how those different parts of the business are doing. Looking at who owns the company, a big chunk, about 14%, is owned by FMR LLC, which is Fidelity Investments. This means they have a significant stake and likely a big say in how the company is run. The Vanguard Group and BlackRock also own substantial amounts of Methode stock, which means big investment firms are keeping a close eye on this company. Let's talk about the people running the show, the directors they seem to all have pretty strong backgrounds. For example, David P. Blom was the CEO of Ohio Health, a big healthcare system. His experience leading a large organization is probably really valuable for Methode. Therese Bodek is another director. She used to be a big deal at PricewaterhouseCoopers PwC, one of the largest accounting firms in the world. Her expertise in accounting and making sure things are done right is a big plus for the company, especially when it comes to managing finances. Jonathan B. DeGaynor is the current president and CEO. He joined in July of last year. Before that, he was the CEO of Stoneridge Inc., another company that makes electronic systems for cars. He seems to bring a lot of experience directly from the automotive world, which is a key market for Methode. Now for the big numbers, the executive compensation. And this is where things get really interesting. We see Jonathan DeGaynor, the CEO, earned a total of over $5.7 million in 2025. That's a lot of money. Scroll the Laura Kowalczyk, Chief Financial Officer scroll. Laura Kowalczyk, the Chief Financial Officer, earned around $2.7 million, and Lars Ulrich, a Senior Vice President in the automotive business, earned a little over $1 million. John Irwin and Kerry Vivsak. The company spent over $4.5 million on audit fees for the year. This is how much they paid Ernst & Young to check their books and make sure everything adds up. This is a significant amount, but it's pretty standard for a company of this size. The tax fees for intercompany transfer pricing were much smaller, around $15,000. The company had a lot of change in 2025, especially with Jonathan DeGaynor becoming the new CEO. They're on a mission to get Methode back to being a top provider of customer solutions. They're focusing on doing things better first and then growing. They even hit record sales in their industrial segment and found new areas to grow in data centers despite facing some challenges. This shows they are making progress even with some bumps in the road. When Jonathan DeGaynor came on board, he got a pretty hefty compensation package. He had a base salary of $1 million and was eligible for a bonus of up to 125% of that. They also gave him a big award of $4 million in stock units, both the kind that just vest over time and the kind that depend on the company's performance. This is a huge investment to bring in top talent. His base salary alone was $1 million. This is a significant number, highlighting the value placed on his leadership, especially during this transformational period. Now, this is always an interesting part for shareholders. The CEO, Jonathan DeGaynor, earned nearly $5.7 million in 2025, while the median employee who is an assembler in China earned about $11,600. That means the CEO earned 492 times what the median employee earned. This is a huge difference and reflects the global nature of their workforce and the vast pay gap that can exist in large corporations. So DeGaynor's total pay in 2005 was over $5.7 million, but when they recalculate for this specific report called compensation actually paid some of that stock award value changes. They adjusted his pay downwards to about $3.2 million. This adjusted number is a bit different because it tries to capture the real value of the stock awards, not just what they were valued at on the day they were given. That gives a more realistic picture of the real value of the stock awards, not just what they were valued at on the day they were given. That gives a more realistic picture of the realized pay. For all the other top executives, the average compensation from the summary table was around $1.2 million, but after adjustments, the compensation actually paid dropped to about $984,000. This suggests that a big chunk of compensation for these executives also comes from stock awards whose value can fluctuate. The company uses pre-tax income and free cash flow as key measures to decide how much bonus the executives get. For 2025, if they had used the initial targets, they wouldn't have paid out much bonus at all because the company didn't hit those performance goals. However, the compensation committee did decide to allow some extra adjustments to the numbers after the year ended to recognize the hard work of the employees who stayed through all the changes. This helped the bonus payouts to be about 76% of the target amount for most executives. Some even got a little extra for their leadership. Something interesting to note is that they used consulting firms named AlixPartners LP for a lot of services, including having their partners Kevin Nystrom and David Rawdon act as interim CEO and CFO respectively. They paid nearly $10 million for these consulting services, which is a pretty big chunk of change. So what's my take on all this? Methode Electronics is clearly going through a major change. They've brought in new leadership and are trying to turn the company around. The executive pay, especially for the new CEO, is quite high, but it's understandable given the company's situation and the experience they wanted to attract. The financial numbers show some mixed signals with record sales in one area, but the bonus payouts being adjusted suggests there were still significant financial challenges throughout the year. The large payout to AlixPartners is also noteworthy, indicating they relied heavily on external help during this transition period. It seems like Methode is making strides with its new strategy, and bringing in experienced leaders like Jonathan DeGaynor is a strong move. However, the company still faces headwinds and needs to consistently deliver on its financial goals to justify the high executive compensation structure and convince investors they are on the right track for sustainable growth. Is Methode on the path to recovery and future success, or are there still major hurdles ahead? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more deep dives into the world of corporate finance and for more exclusive content and discussions. Join our Discord community, the link is in the description. Thanks for watching and see you on the next deep dive.